Or are you running a business? Valuation is the ultimate KPI.
Hey there, it's Mike Langford. Welcome to another episode of the Modern Financial Advisor Podcast, brought to you by Truelytics, the one and only comprehensive advisor transition management platform. This week on the show, Owen Dahl makes his triumphant return to the podcast as the new head of professional services at Truelytics. Now, as you may recall, Owen joined Terry Mullen and me last year to explore how the pandemic might affect valuations for RIAs and independent financial advisory businesses. And since then, Owen joined the Truelytics board of directors, and most recently, he decided to roll up his sleeves and dive in with the team to help wealth management firms and individual advisors better navigate their business transitions. Owen is also actively involved in the New Solutions Partner Program, which extends the power of Truelytics to consultants who serve the RIA and independent financial advisor community. So, if you work with advisors to help them improve their business, help them with their M&A or succession planning, this program is for you. To learn more, swing by info.truelytics.com/solutions-partner. Okay, lastly, make sure you subscribe to the podcast on Apple Podcasts, Spotify, Google, the YouTubes, or wherever you like to get your podcast jam on. And if you have a question or suggestion for a guest or a topic on the show, even if that guest is you, be sure to reach out by shooting us a note at podcast@truelytics.com or use the contact form on the Truelytics site. Okay, let's get to our conversation with Owen Dahl. Well, Owen Dahl, so fantastic to see you again, buddy. We were on a podcast last year sometime with Terry Mullen and had a fantastic conversation then. So now you're back and you're kind of here in a new capacity. So welcome to the Modern Financial Advisor Podcast.
Well, it's great to be here. It feels like it was 100 years ago, but it's only been one pandemic-filled year. Amazing.
That's a great way of putting it. Like time does seem to expand when you're going through some challenging times and some really interesting times, to say the least. It does seem to like it's been a lot longer. It feels like this pandemic has been going on for 5 years.
Yeah,
about a year and a half.
It does.
So.
And I think our last topics related to whether the sky was falling or not. And I guess the sky's still above us and the ground's beneath us. And
so we are surviving. Exactly right. Well, I think I mentioned this in the first time we talked, in kind of introing you in the show, and I recorded the intro portion of it. You were one of the OGs, right? The original Gladstone people that were involved in creating the Truelytics software. And, as everybody who listens to the show knows, Truelytics is a software company. But what is really interesting is that the genesis of the software was that you were actually a service company, right? You were a professional services company originally. And you were there at the beginning, as I mentioned, kind of for that "let there be light" moment. So for keeping with the Genesis theme. So I wonder if we could jump back in the time machine and go back to the origins of the software and get a feel for the problem that you and the team then were solving for. And then we can explore like how things have evolved from there, and then where we are today, what we predict for the future. But like thinking back to the days when kind of the first stuff started rattling in your head and you're like, hey, we need to build something. What was that impetus?
Yeah, it's really interesting. When we started the software company, the software's genesis really goes back to the book that Mark Tabergen and I published in 2005. And at that time, we were writing the treatise on valuing financial services companies. And that book was obviously successful. I think it's somewhere in the 300,000 published range at this point. The unfortunately and fortunately, and a little of both, it became easy enough to contact us. We couldn't run from our past, if you will. And so I got a ton of calls from small advisors who really needed help. And it solidified something. I was coming out of a consulting environment, the sort of Ivory Towers consulting environment, where our average fee per engagement was $10,000. And the people who really needed our help weren't willing or able to pay that. And it really got me thinking. I would have these hour-long conversations with very nice people, business owners who were in the beginning stages of transition, who needed help. And, our business model is written around having very smart MBAs sitting behind desks, billing out at $250 an hour to begin with, up to $600 an hour for their time to enter financial statements into spreadsheets and to track down and research certain issues and to do things that were not necessarily value added at $250 an hour. And so we started thinking about software as a solution that would get a lot of the grunt or the document management, the data management, the data input, all that stuff that's so necessary in an assignment into a form that we could cost effectively help people. And so that was really a start. My idea was if I could get my time down to an hour per assignment or 2 hours per assignment, maybe we could put something back in the market that was value added to the smallest advisors. And as we started down that path, we started realizing there's a lot of stuff we could do in addition to that, and that the things that we preach, which are the cash matters, cash flow matters, the value of business is inherently a function of how it generates income and how it generates cash flow to the owner. If we could create a center point of valuation, and we could start, using artificial intelligence and using computer modeling, we could start doing things that were really, really cool, and we could do it real time. So we could say, like, what happens if our revenue growth rate goes up? What happens if our client age comes down? What happens if all of the parameters, all the 125 things that go into our algorithms, what if we start changing these metrics minutely? What does it do to the value of the business? And so, that was the genesis. And what we realized that we were creating wasn't so much a valuation tool as it was a practice management tool, something where advisors could start looking to improve themselves on a real-time basis, could start measuring and managing their own practices. And it was sort of at the same time that, and this is 2012, by the way, it took us from 2005 to 2012 to figure out the problem because we weren't very smart. and in a way we were, interestingly enough, cannibalizing or threatening to cannibalize our own business. So the consulting firm, the public accounting firm that I was with, really didn't like the answer very much, and that led me to leave the company I was with and join up with Gladstone and start the process that became Truelytics. And we just became super passionate about replacing consultants altogether, about getting to the point where everything that was in my head would end up in the software and end up being available to people on a subscription basis, so that we could stop having people go to overpriced consultants and paying bills that they couldn't afford to pay. That was sort of our driving call to arms, if you will.
I think it's so fascinating. There's some similarities there to what an advisor is able to do with good financial planning and asset modeling software, right? Where, if they had to do some of the things that they do manually, they wouldn't be able to serve most of the clients that they serve today because it would just be prohibitively expensive, as you mentioned, right? If you had to sit down with a pen and paper or your own, like, create a custom spreadsheet for every client to manage their portfolio and do the financial planning on, like, what's it going to be like when their kids retire, or what if they go to an Ivy League school versus a state school, and all that type of stuff, all these variables that are in a client's life, it would be prohibitively expensive and take a lot of time. But there's been software tools that have been developed to streamline a lot of that work. And so, as you mentioned, you can put some of the common things in, and the software is designed to handle some of the heavy lifting there. And that's exactly what you built back then, is you understood that problem.
Yeah, and it is actually even more interesting that, because as we built it and we realized that the power of the algorithmic capability of computing, we were able to take it a step further and start answering questions that we knew intuitively mattered. For example, how does client age affect the value of a portfolio of clients? Well, there's no one in the world that's going to pay you to take their 700 clients and individually run out the cash flow for each client sum those up over a present value calculation going forward 25 years and decide whether the average age of a 59-year-old client base is more or less valuable than the average age of a 65-year-old client base. Because it would take you days to create this single model.
Right.
But the power of computing is now we can say, we create the algorithm once and we run it tens of thousands of times at no additional marginal cost.
Yeah.
And that's where now we're getting really good at saying we know what matters and we know incrementally how much it matters. And that's through, as I mentioned before, the power of artificial intelligence, the power of massive computing and big data. And that's the really exciting part for me, sort of from an intellectual perspective of what we've created. We're going back now and saying, we always knew that revenue quality mattered. We always had an idea of what revenue quality looked like, but now we know that revenue quality has these components to it. What's the value of a death benefit on an insurance policy, for example, on a 55-year-old client, given they're expected to work another 10 years, they're going to die at the age of 78.4, and at that time they're going to have $1 million death benefit. So we're answering questions that we always thought were important questions but didn't have the capability to respond to. We're now answering them mathematically, and we're getting answers that are really surprising and interesting. That's
fascinating. It's really interesting to me because the other parallel here is, we're leveraging the power of computing, and as you mentioned, artificial intelligence, and also just all the experience of what we've run before in the models, and we're starting to see the patterns there, and the machine gets smarter and smarter over time. There's often, advisors fear this in their business. They start getting fearful, like, oh, is this going to replace me? Is it going to take me out of the equation? And the answer is usually, no, actually it doesn't. What it does is it frees you up from the mundane or the drudgery of having to do so many manual calculations or having to do so much manual data entry and so forth. And now you get to come up a level in your insight and your analysis. And we're seeing the same thing with Truelytics in the ecosystem, because, you're back with Truelytics. You agreed to head up professional services efforts at the firm. And obviously that's an example of like, hey, look, professional services didn't go away. It's just going to be doing some different stuff. So what are the types of professional services that Truelytics is offering and that you're leading?
What a great question. The biggest and most exciting thing, I mentioned replacing me, and to an extent there's a lot of what I do in a day in and day out basis that Truelytics does replace, and it's the good stuff. Like you said, it's the ditch digging. It's data entry, taking pages and pages of income statements and tax returns and manually entering them into Excel spreadsheets and summing them up to make sure that they add up and they equal what the document says. That stuff's gone. And so we're taking what are $5,000 and $6,000 engagements that take 30 hours of my time, and we're taking them down to incrementally cheaper engagements to our clients. They're taking a couple hours of my time. So it's right back to what I originally sort of envisioned for my job. And I always envision it. I don't know if your listeners are football fans, but if you ever watch the line judges who get to the goal line and there's a touchdown and they don't know if it just kind of squeaked through, and the judges go to these sidebars and they put their head inside the black box and they watch the play once and then they make a call on it. I always thought it would be really cool if my job was that easy. If I could look at the data and then qualitatively decide what the result was. And that's sort of what we're getting to. And so the simple consulting is that we're doing is where valuations need that third set of eyes. So if there's a lender in place, for example, who are looking to borrow or to lend money for a transaction, they may want that third set of eyes, somebody who says, I bless this. Yeah. That's the simple and sort of most typical type of consulting engagement we get into. Other ones where you've got a buyer and seller and they're negotiating the deal terms and they're trying to figure out how value equates to deal structure. That's a really important one. I think people who are going through a deal for their first times are sometimes surprised at the complexity of transactions. How much of a value is payable in cash? How much comes back in a note that's written between the buyer and seller? how much of a deal is payable in contingency that's reliant on client transition, and who accepts the risk for that. Those kinds of things are above and beyond software, because they need that balancing of humanity. They need somebody to say, well, if you give up this is what you should get in exchange. This is the cost of what you're giving up, those kinds of things. And then we still do a lot of litigation work. Unfortunately, our listeners, our users go through divorce, they go through ownership transitions that don't go well, they go through shareholder disputes between buyers. So those are the kinds of things that software doesn't do a very good job of. Not very many pieces of software yet anyway testify at trial. So those are our typical types of engagements and the things that we're still going to be actively involved in.
Yeah, I was just trying to think about will that day come where that, a piece of software or some sort of robot takes a stand, and like, are we going to have to ask them if they're telling the truth or not?
Yeah, right. Well, there's gray areas of truth, Your Honor. Unfortunately, exactly. I'm telling all of them.
Yeah, it's just thinking about some of the things you're saying there. The second set of eyes or third set of eyes being really, really important, and. The other thing is that, and this is something I think advisors can really appreciate, is, there's the human element. As you mentioned, for most advisors, especially almost all the sellers, I would assume, this is the first and only time they've ever sold a business or transitioned out of a business. And if you're going through something for the first time, there's so many unknowns that you don't know, right? There's so much uncertainty. There's so much anxiety about it. And to have another human being that has worked this problem before, right? Or this opportunity before, however you want to look at it, is the same way as when a client, most clients don't know how to do a financial plan. They don't know how to plan for retirement and estate planning and their children's college fund, or what happens when they have an elderly parent who needs elder care. Those are not things that the average person, even a very wealthy and affluent person, knows how to do, right? Even though they've been successful in other areas. So when it comes to selling your business or transitioning out of your business, there's sure to be the need to talk to a human, even though the software can help you accomplish a lot of the heavy lifting that makes sure you're prepared for that.
Yeah, absolutely. And I think the other part of that human element, that human dynamic, is we don't know. No software is going to be able to tell you what really matters to a buyer, or to a seller, pardon me, to a buyer as well, but really focusing on the sell side. That it's interesting how different sellers approach this. For many people, maximizing the money that comes to them is not even their most pertinent issue. What they want to know is that their clients are taken care of, or that their staff is taken care of, that their human element, that they're selling to somebody who is buying with the same set of principles. I always use my dad as an example. He's a financial planner who's actually retiring. It's the 30th of August as we write this. His last day in the office is the 31st. It's tomorrow.
Oh, wow. Okay.
And I was up this last month visiting my family, and we were talking about his retirement. He said the two things that mattered to him were somebody who bought his practice who agreed to keep a storefront. He wanted to know that his clients could walk in the door anytime they wanted. Surprised me. And he said he wanted to know it was somebody that would call them back in 24 hours, because that was the way they ran their business for 35 years, and it mattered to him that was a continuation of their trust, of the level of trust that his clients had. I can't tell him that he's right or wrong. I can't tell him that it matters or doesn't matter. It matters to him. And so we can get really excited and bent into the mathematics of our algorithms, but we can't unless we have the ability to understand our clients. We can't appreciate the things that matter on a one-off basis. Yeah. So we're never going to get rid of the human element. We're never going to get rid of the touches that are needed to be able to respond to everybody. And so I think anybody who gets really overly focused on numbers is going to probably miss the boat when they get time to do a transaction.
Again, I think it builds on that concept of like, hey, this frees us from having to focus too much on the numbers. Like, the numbers are going to be important.
Yeah.
I've said many times that, like, listen, as a general rule, financial advisory businesses are somewhat commoditized in terms of like you all have access to the same, stocks, bonds, and mutual funds, right? You're all selling basically about the same services and charging about the same price. So now it comes down to like, what sets you apart? If somebody was choosing between Mike and Owen, well, they're going to talk to us. They're going to look at our services and find out that they're probably about the same. And they're going to be like, you know what? I really enjoy working with Owen more. Why? Well, he's closer to me in the Pacific Northwest. He's into boats. I'm into boats, those types of things. Yeah. And so they're going to choose you based on some other factors in addition to the things that you do. And when you're evaluating a deal, culture is going to matter, right? Like your dad, like that, the whole concept of a storefront, that's not in an algorithm. I mean, you can put it in a questionnaire, like, hey, does this person have a storefront, have an office, or are they operating virtually? That certainly can be there. But yeah, that's fascinating. It's really important. Yeah, it is. And I don't think there's, we use like extreme examples when we talk about this with clients. If you are 30 years of selling indexed funds and you have told every one of your clients that there's no stock picker that can beat the market, and you sell to an active trader, the guy who believes that he's going to beat the market, he's going to piss off a lot of those clients, and there's going to see some client retention issues that are going to affect the bottom line of the deal structure. Yeah. Those make sense to people, but there's a lot of emotion that goes on from the seller's perspective, as you mentioned, who's only going to do this once. It's the part of the job that has kept me coming back, and it's really nice to be back with Truelytics, dealing with the professional services side, so we can take the math out, take the stuff out that is cumbersome and tiring, and really focus on the things that do matter, the human element. Yeah. And it's, I can imagine if I were selling a business or considering selling a business, sometimes the weight of the work that you think you have to do can give you pause and just cause you to delay and kick the can down the road or whatever. And so because there's this amazing software solution that can take some of that pain out of the way, make it really easy, now you can focus on the things that are important. Like, hey, I do want to sell my business. Here's who I want to sell my business to. This is what he or she should look like. And this is what I want for my clients, because somebody's taking over the legacy of what I've been building for the last 30, 40 years. I think that's just really smart. That's exactly right. Yeah. We constantly we've been preaching for 25 years to be actively and proactively managing your succession plan. Mm. And what we know from experience is that people don't do it because it's daunting. Yeah. They don't know where to begin. It's too easy to fall into the trap of your typical day, which involves your clients, the things that you actually love to do as a financial advisor, which is the things that I love to do as a financial consultant, talk to the clients, look after their needs. Yeah. But at the end of the day, if we can take some of that monotony away, and I think that the professional services side of Truelytics has an opportunity to really help. What I mean by that is, if we can get them set up through the use of software at a low price point, get them sort of dialed in and targeted in on what the value of their practice is today, even if they're not ready. A combination really engagement where they're using our software and they're using our professional services to establish a baseline today, and then manage that going forward. They know they're starting with real data and they're starting with a clean value. Price point is where I hoped it would be when we started this whole endeavor back in 2012. It's cost effective. It works from a value proposition. And now they can manage their own data inputs, their own what-if scenarios. They can play with the software to figure out what a deal structure might look like going forward. And hopefully they become more proactive so that they're starting their succession plan 5 years early, like we've been telling them to for 25 years. Yeah, that's great. It's fantastic. And it is so funny. Like, we all kind of kicked the can down the road on certain things. And that is definitely something that you shouldn't be doing, right? Because at some point in time, I think I have to mention it in almost every single podcast I do here, is father time is undefeated, right? Like at some point in time, you will exit this business, right? And so you should plan on that happening and be ready. And even if you don't know exactly when the date is, you should have the pieces in place so that in the event that you had to exit the business, for whatever reason, you could get the ball rolling. One of the things I'm really excited about, I wanted to make sure we did cover, is while we're still on this topic of professional services and kind of how it relates to the software component, is I'm really excited about the software has enabled the solution delivery to scale, right? To go beyond where it would be if it was just only professional services. We've talked a little bit about that. And it's not just like, what does Truelytics deliver, right? And what are you doing as you're heading up the professional services team there? But it's also other solution partners that are in the industry, right? So you've just recently launched the Solutions Partner Program at Truelytics. And it's fascinating because I hear, like, literally get hit up via email or LinkedIn Messenger a couple of times a week from somebody who services financial advisors in some way, shape, or capacity, right? They're helping them with their M&A consultancy. They're helping them add tax planning services to their practice. They are helping them generate leads or whatever. And I'm thinking, these people are absolutely perfect, right? They should absolutely have this piece of software, Truelytics and True Performance most specifically, in their wheelhouse if they're going to be working with these advisors.
Yeah, I mean, this is not an area where we want to compete with other professional services. We literally want the software solution to be the basis by which we speak the same language. There's commonality in what we're all trying to provide to the marketplace. There is what we believe to be this hugely effective way of communicating and pursuing the value add that is consulting. And gosh, if everybody were using Truelytics, we could offer a service that we think is superior to what's in the marketplace today. And the pride is really in the software itself. And I think we're going to see our service providing brethren improve their ability to meet their target needs. And we know that because we work a lot of times internally with companies. As you know, most large RIAs and broker dealers are trying to deal with succession planning within their own ranks, and they have succession planning teams. And when we've been successful in having them adopt our software in-house, we've seen their ability to offer the service providers who are providing to their captive teams a really enhanced product, and they're really happy. And we've learned a lot in what they need, what they're trying to do, how we can communicate with them so that they can communicate with their clients. And I think, our iterations and our improvement, one of the things that's really exciting about where Truelytics has come since I was, since the early days, is really in the user interface and in the usability and the way that we communicate, the way the software works with people is so much better.
Yeah.
The team has done just such a fantastic job of taking an initial concept, which was clunky and boxy and challenging to work around, and making it really streamlined and effective. And that's, I think, where we're seeing the real benefit on the professional services side.
I love that you brought that up, because I think this is almost like 20 years old, this concept. There was a book written called Don't Make Me Think, and I'm blanking on the author, but it is about, hey, making software and digital products so easy that the user doesn't have to work hard to use it. And especially in our industry, a lot of the legacy enterprise software is really hard to use almost by design, right? Because what they wanted to do is not only sell you the software, but they wanted to sell you the training on how to use the software as well. Like, that's how you're going to be able to use this. It's kind of like a lock-in type of deal. But something switched, right? When in the dawn, it really revolved around the dawn of the smartphone, and when people started being able to download apps really quickly and expect to be functional with that app within a few minutes, right. That old enterprise software model had to die, right? Because you're going to be competing with new solutions coming in and just saying, "Hey, here you go." And I would agree with you. The team has done a fantastic job designing a product that just, the joking phrase is, we've idiot-proofed it, right? It's like you can just jump in and go.
I'm still passionately, probably annoyingly involved on the development side. I think I probably drive our team nuts. And one of the things I'm constantly pushing for can we ask that question in a better way? Can we find that data without confusing somebody, and we're going to continue to get better at that. That's a commitment that I know is fast and true across the Truelytics platform. We know that we're dealing with a sort of a paradigm, because on the one side, we're doing something that's very complex. We're getting a lot of information and running a lot of very complicated algorithms. The challenge is, how do we get that data and that information in a way that is not cumbersome, not complicated, and doesn't create a wall for the user? And we can continue to get better at that. I think it's our challenge. It's a challenge that we take seriously. If we can get this to the point where we put myself out of business completely, I'll be satisfied. I don't think we'll quite get there. We'll always have that, as we mentioned before, that human element need. But software does a lot today that it didn't do 10 years ago.
Right. Yeah.
It's the power of algorithmic computing and the power of big data. We're just breaching those issues in most industries, and certainly in this one.
And the other thing, and this gets down a tiny bit into the weeds, but the other thing that's really very promising, and we're seeing more and more of this in our industry, is sharing standards, right? So whether it's via APIs, on the retail side, you're starting to see movements like open banking and open finance coming for the consumers, but I think you're going to start seeing that on the business side too, for RIAs and independent financial advisors, that a recognition that this data is their data, and they may want to take that data out of your platform and be able to use it in the solutions as they see fit. I mean, if I'm an independent financial advisor in a broker-dealer situation, I'm an independent business owner. This is my business. And so a lot of this data is my data. And what I would really love to be able to do is take that data and use it with all the other services that I have, right? So I want to be able to see account level data. I want to be, right? And obviously there's some rules and regulations on how financial consumer data is used. But as it relates to my business, I want to know, like, how many accounts do I have? How much assets per account, revenue generated per account. And I want to be able to suck that information right into Truelytics and have it do the things it does versus me having to enter that information, right?
Well, and what might surprise your listeners is that when we originally built the software and embedded in the technology that's used, was that capability and that ability. We had always envisioned this as being sort of a data feeder, a data collector that worked behind the scenes on your CRMs and on your practice management software, and it's there. It's ready to go. We're excited sort of for the future generations and iterations to be able to feed in and reduce data entry to its minimum. Yeah,
no, it's fantastic. I love it. And that's some of the promise that we know is coming, right? It's just like, there are certain things, I always joke about, like these A to B problems. Like, I can see B. Like, I know what B is going to be. It's going to be, 10 years from now, it's going to be really easy to pull data in. Everybody's going to have the pipes built. We're at A right now. some missing pieces in between, but I know what it's going to look like in the future. This is definitely one of those things. Speaking of the future, there's a belief at Truelytics, and we've already hinted at it, and it's in the broader industry as well, that we're on the cusp of this great wave of advisor transition. The Cerulli report last year, I think, pegged it at nearly 40% of advisors that are active today, or were active in 2020, that they're expecting that 40% of those advisors are going to exit the business by 2030, right? Again, Father Time is undefeated. Some of them will retire. Unfortunately, some of them will pass away, or whatever, but they will. And so there is going to be a movement, right? It's going to happen. And whether it's 40% or 30% or whatever, it's going to be a relatively big number. So there's going to be a transition in many of advisors' future sometime soon. They're going to be handing their business over to someone. How do you advise independent financial advisors, RIAs, broker-dealers to prepare for this wave of transition? Like, what is some of the core steps that they should be focused on as just knowing that this is going to happen?
Yeah, great question. Nothing's changed in terms of what we've been preaching for 25 years now, other than the fact that we're 25 years closer to this exodus. And I keep expecting to see it. I don't know what it's going to look like when it really hits. We're seeing increases in deal volume. We're not seeing this massive dam break or anything of the sort, but interestingly, when you talk to advisors now, what I find is I had a call just before we started this morning, and the advisor who's looking to transition is 69 years old, and I think probably 10 years ago we expected the transition to happen when that advisor was 65 years old. You know, the advisors are sticking around a little longer than we expected, but that exodus, when it happens, is going to be fast and furious. And when it happens, those who are prepared are obviously going to have the best opportunity to maximize the value. And preparation means as much about preparing your financial statement, so making sure that you have clean financial records. And by gosh, this is still not the norm. I am amazed at the poor quality of financial statements in general across the industry, especially among advisors with less than $1 million in assets, with less than $1 million in revenue. It behooves the financial advisors to get help, and Truelytics can help you setting up your books properly so you're tracking the things that matter from an expense burden perspective. Stop commingling expenses and expecting the buyers to not care about it. Stop including the cost of your golf memberships in your P&Ls. These are things that matter.
Yeah.
Golf memberships is a bad example because the IRS excluded that years ago. But But I'm sure you know what I mean.
Yeah.
There's a process on the staffing side. Do you have the capability of the right people in-house to internalize the transaction? If you do, and you think you do, start the process now. Start looking to make sure, your documents, your non-compete or your non-solicitation agreements are in effect. Make sure that you're talking to your next generation about early equitizing, about getting them involved in ownership ahead of the game before you're ready to transition. Make sure that you're looking at every opportunity to internalize the transaction before you go out-house, because your best chance to monetize is always going to be an organic transition. Know what the value of your firm is. That's where software really comes in handy, because if you're doing it early and often, and Truelytics is a great opportunity for you to do that, you're going to be able to think about value and think about how your value is improving as you implement some of these key concepts. Make sure, especially if you're part of that 40% and you're in that last leg of your career, make sure that you have a continuity plan in place. It's integral to success that you actually have something to sell if you were to be hit by the proverbial bus. There's a number of steps that have to happen before you get to that 5-year plan and the implementation of the 5-year plan, but especially understand that when you probably find the identified buyer, you're not out the door in 6 months. It's going to take some time for the deal to close, and once the deal's closed, it's probably going to take some time for you to stick around and work on ownership transition or client transition issues.
That kind of hits on something that I want to do. We're getting towards the end here, and I want to make sure we talk about this. This great wave prediction is I think has a kind of has some people thinking it's going to be an all or nothing, pull the ripcord and I'm out type of concept, right? That they just, hey, that means what Mike and Owen are talking about is there's an expectation. I'm 63 or whatever the age is, that I'm somehow out of here by 2030. I like what I do. I want to keep working. I love my clients. I've been around with them for a while or whatever. Or as Terry Mullen has talked about on this podcast a few times, that, hey, listen, some advisors, they kind of look at how much they would be able to sell the business for, and that's not going to be enough money for me to live out my golden years on. Why don't I just keep working? Because I'm making $300,000 a year. If I sell this business for $1.2 million, that's only 4 years of income here. Right. Why don't I just stick with it? But I guess it's I think it's important for us to talk about. It's not an all or nothing concept, is it? Right? There's opportunities for an advisor to sell a part or all of their business and still stay involved.
Yeah, absolutely. I mean, we're seeing the deal structures and those types of things becoming more and more commonplace. The idea that you're selling a business is it one way to go. It's one way to certainly maximize your transferable value. It's definitely not the only way. And to Terry's point, I have that question asked me all the time. Why would I bother transitioning if I can just stick around for 4 more years and monetize it? But when you're done with the 4 years, you still got a transferable asset. And so you still need a transition plan. You've got a smaller transferable asset because you've probably either lost some of those clients. And keep in mind, if you're not working 40 hours a week or 50 hours a week, you're going to see some additional client retention. You're going to see some losses. You have to ask yourself if you're committed to retaining the knowledge base that's necessary to meet some of your clients' more complex financial planning issues. If you're not in the office on a regular basis, how's that going to affect your relationship with the clients? Those are all personal questions that no software is going to answer for you. Yeah. I know with my dad, using him as an example again, when he decided to go basically that route, he's 73, his last day again is tomorrow. He's selling a book of about 20 clients. The other 60 clients he slowly transitioned out of over the last 10 years. So, he still had something to sell at the end of the day. So you still have transition issues. You still have to think about the business value at the end of the day.
Yeah.
But you're thinking about a different valuation question for sure.
Yeah. Well, and I think it's so important that you mentioned the potential atrophy, right? That you may stay on, but it's not like the business is going to just continue to grow. I mean, yes, we've had some free money growth with the markets just going up, over the up and up every year for the last decade plus here. But the reality is that's not going to continue forever. And if you are a 65 or 70-year-old advisor, chances are your client roster looks kind of close to your demographic. Right.
It's amazing how that works. In
right.
fact, not to interrupt you, but one of the things I mentioned before that software allowed us to do was answer some interesting questions. And one of the interesting questions that we came up with was just how tightly correlated the number one predictor of a client's average age is the advisor's average age. They're almost identical in every case. If you're 55, your client is 55. Funny enough.
Yeah, it is really wild. And, this COVID experience, kind of wrapping things up like where we teed them off, I think that's shown that into stark relief, right? That, hey, look, there's a lot of risk here that, this pandemic was particularly harsh on folks who are older. And so if you have an older client roster and you yourself are older, there's a lot of risk there in the business. And so you should be prepared. At a minimum, be prepared for a succession plan and have a continuity plan in place and start thinking about it. Like, what's it going to be like when I exit? How should I exit? Who would take over this business? So, well, Owen, getting close to the end of our time here, I know that folks are going to want to follow up with you. And if for no other reason, they'll be like, hey, welcome back to Truelytics. It's amazing to have you as part of the team, the professional services team. I know that a lot of folks are going to want to follow up to talk about the Solutions Partner Program with you. What's the best way for people to reach out to you?
Owen at Truelytics.com. Send me an email anytime. I'll respond to them all. That we don't have, I can give you my number as well. Call anytime. It's 206-707-9260.
All right.
We're looking forward to hearing from you.
Fantastic. Well, Owen Dahl, wonderful to have you on the show again. I'm sure this is not the last time. I'm sure we're going to do many more of these. This has been fantastic. Thank you, sir.
Absolutely. It's a pleasure, Mike. Always fun to hear from you.
Thank you very much for listening to and or watching this episode of the Modern Financial Advisor podcast. It's always fantastic to have you with us. Huge thanks to Owen Dahl for bringing the thunder today. I loved hearing the origin story behind the genesis of the Truelytics software, and more importantly, getting a glimpse of his vision for how the technology can help advisors with their business and the role of professional services in the equation of helping advisors with their transition needs. So awesome stuff. Thank you very much, Owen. Now, before I let you go, as I mentioned at the top of the show, be sure you check out the new Solutions Partner Program by swinging by info.truelytics.com/solutions-partner. Link is below if you're watching the video, like right below right now. Okay. Make sure you let all the consultants who are calling you and filling up your LinkedIn inbox know about it as well. I mean, as I mentioned in the prior episode, just give them a little, hey, thanks for reaching out, but we only talk to consultants who work with Truelytics. We're committed to using the platform here at our firm. If you don't work with them, here's a little link for you. So take that info.truelytics.com/solutions-partner, put it in the reply, let them know where to go. All right. We'd love to work with them. All right. That's all for today. Please stay safe and get vaccinated if you haven't done so already. I mean, seriously, I want to be able to hang out together, you and me, without masks, right? So get the shot. It doesn't hurt at all. Just poquito right in your arm, hurt for a day or so, and then you're back at it. Get it done so we can just get back to hanging out. All right. All right. We will see you next time on the Modern Financial Advisor podcast. See ya. Bye.